This is likely to worry some investors and market watchers who see overconfidence in the future as a sign that things are about to change. On Wednesday, the latest consumer sentiment survey from the University of Michigan indicated that while overall confidence in the economy is sitting right near a 13-year high, what has changed recently is the degree of certainty with which consumers hold their economic expectations. Inflation expectations have shown the smallest dispersion on record, and increased certainty about future income and job prospects has become a key factor that has supported discretionary purchases. Emphasis added. Back in October, this idea that consumers were becoming increasingly confident not just in the U.S. economy right now but their expectations for the economy began to come into focus. In mid-October, the University of Michigan survey indicated that consumers were characterizing the current economic situation by calling it as good as it gets. On the Wall Street side of the economic equation, this past week has seen at least 5 major research teams unveil bullish outlooks for the market in 2018 and forecast double-digit returns for the U.S. benchmark stock index. And these forecasts come on the heels of a Bank of America Merrill Lynch survey last week which shows that a record number of fund managers are taking a higher than normal amount of risk. David Kostin, chief equity strategist at Goldman Sachs, called the firm's guiding theme for 2018 and the years ahead rational exuberance, a play on the famous formulation from former Fed Chair Alan Greenspan. As we noted on Tuesday, Greenspan's question was rhetorical. A public pondering of it can be known, prima facie, that markets or an economy have become overheated to the extent that we will see unavoidable damage in the future. Goldman's reformulation of this question, however, seems to posit that if we take irrationality out of an enthusiasm for markets or the economy we can know what the future brings. And in this case, that means modestly higher stock prices and slow, but steady, economic growth. Miles Udland is a writer at News Pulse Finance. Follow him on Twitter at Miles Udland.